Good morning, everyone. Thank you for joining the webinar on 360-degree impact of the amendments in tax procedures law, also known as TPL. I'm Tanu Sharma, and I'm associated with Anderson in the UAE as a senior tax consultant with over 5 years experience in indirect taxation. I'll be your host for today for the amendment webinar. And to start with the same, let me take you through some points so that everyone has a smooth and seamless experience during the webinar. Once we share a screen, if you're not able to have the view of my team, kindly change your camera to fit to frame to have the complete view. Secondly, all the participants are on mute. You can put up your questions in the chat box and we will be replying or addressing as many questions as we can at the end of the session, at the end of the presentation in the Q&A session. And the webinar is being recorded. So probably you will be receiving the link of the recorded webinar at the end of the presentation. Coming towards the agenda. So today our agenda for webinar will be revolving around the amendments and implications of the recently released amendment on TPL, giving some practical scenarios and way forward on the same. Now, so basically now I would like to introduce our tax experts who will be taking you through the amendments on the executive regulation. I have Gaurav Chugani.
Thank you, Tanu.
So he is associated as a manager with Anderson in the UAE, and he has over 8 years experience in direct and indirect taxation. Recently, he has been nominated as a ITR Rising Star in tax litigation and controversies.
Thank you.
Then we have Amandeep Singh. He
Morning.
has almost 5 years experience in indirect taxation. And so, yeah, these both speakers would take us through the entire amendments that have been released. Now, before starting with the webinar, I would like to create a base so that you could relate to what is happening in the history and development of the tax procedure law and executive regulation. With the start of the VAT in 2018 in UAE, the Federal Law Tax Authority has introduced Tax Procedures Law number 7 of 2017, which is primarily focusing on administration and regulation of VAT. For implementing the tax procedure law, FT has further introduced executive regulations, which comprises of detailed rules, procedures, and provisions which are not provided for in the law and which are aimed at facilitating the implementation of the law. Later, FTA has introduced administrative penalties via Cabinet Decision 40 of 2017, which was later amended by Cabinet Decision 49 of 2021. And basically, this was brought into existence for penalizing the taxpayers who violate the law. Now, sometime back, FTA has replaced the initially issued tax procedure law with a new procedure law number 28 of 2022. And in line with that procedure law, it has replaced the old executive regulation by introducing the new executive regulation via Cabinet Decision number 74 of 2023. I would take you through the legal framework, what FTA generally follows. So in a nutshell, I'll just conclude it. FTA generally releases the law, which covers all the legal aspects and which is followed by the executive regulations. As I said earlier, it gives you the detailed rules, provisions, and procedures which the companies are required to follow so that they can abide by the law. Then FTA also releases some regulations and public clarification to make it to bring more clarity on the specific points or any issue point. Then it also releases guides, memorandum, notifications, or flyers, which can be general or industry specific. Now, FTA has also, to bring clarity on some specific laws or on regulations. It also conducts many seminars, events, webinars, which you must be coming across on the LinkedIn or other pages of FTA.
Yes.
And FTA has also given some facilities like technical clarification, which businesses could, undertake uh, to evaluate any tax treatment for any critical transactions, or if they have any ambiguity in any of the scenarios or business
Yes,
nature.
I agree, Tanu. So just to add, so basically the tax procedures law or any law which has been implemented always has an executive regulation, and the FTA, to give more understanding and to give more guidance, releases a lot of clarifications, memorandums, guides. So the FTA's intention is very clear. They want to guide us in such a manner that there is no sort of non-compliance, and if there is non-compliance, of course there are consequences and again penalties which revolve around the non-compliances. So, to be very honest, the entire tax ecosystem revolves throughout the tax procedures law, because the procedural laws gives you how to address various issues and how to sort of mitigate sort of procedural lapse. If you have a procedural lapse, in that case, what happens is that what happens is mainly if you are litigating, and if there is a procedural lapse in the litigation process, the entire litigation process is challenged. And it can either be challenged by the FTA if there is a procedural lapse from FTA, or if there is a procedural lapse from the taxpayer, it can be challenged from that perspective also. So the processes which are defined in the TPL should be followed, even if it's dates, even if it is the manner, even if it's the means of communication, everything should be followed as it is mentioned. So there's no exception until unless there is sort of a liberty given by the law, or there's a sort of a administrative exception which is there. But generally, without sort of meeting the technical or the procedural thing conditions, you cannot move forward.
Yeah. Okay.
So again, we go back to the presentation. So we can sort of tell you the intention of the TPL. So the main intention of the TPL was to give you a brief about how the tax laws, that is the VAT, the excise, and the corporate tax now, which is going to be implemented or which is already implemented. So how these laws will be regulated, how the records for these laws, how the commercial documents, the accounting documents have to be maintained. And if you want to challenge something to the FTA, you can file a reconsideration, how those reconsiderations will be filed, when, the manner, the entire process is defined there. If you want to further litigate, you want to go to TDRC, and if you want to dispute the tax, if you want to go to court, how that process will be there is defined over here. Like there is a timeline, there is a mannerism, there is a protocol. Because if you do not follow the mannerism, there is a contempt, and then it will not be accepted by any of the forums. Then if you see the communication means, so if you are communicating with the FTA, there is a set means which is defined. You have to communicate in through that channel only. You cannot sort of use a different channel or a channel which is not defined by the FTA. You cannot just email. There is a process, everything. Now, if with the Imara tax coming up, there is a lot of things which has been defined. There are a lot of things which are available on the portal right now, be it administrative exception, be it what you might say filing of reconsideration. Previously, when we started in 2018, emails were the communication mode, but now things have become different. Everything is being sort of done through the portal. So those things are there, which is written in the TPL. Then now how voluntary disclosures will be filed, what are the timelines, what are the quantum, those things are defined for voluntary disclosures if you have made an error in the return. So those things. Mostly nowadays tax agents help the taxable persons to file returns, to sort of manage the taxes. And so what happens is that the tax agents, how the tax agents have to sort of follow the procedures, what all qualifications they require, how they're sort of supposed to do things is defined in the TPL. How the assessments, how the audits will be taking place is defined in the TPL. Then, of course, there are rights for the taxable person and there are rights for the FTA also. Those are also defined in the FTA, in the TPL, because everyone should know their right. Because if you're litigating, or if you're challenging, or if you're doing a certain tax sort of a matter, everyone should know their rights and limitations. And of course, there are duties and responsibilities also which are defined here. Moving ahead.
Now, starting off with the amendments to the actual executive regulation and the new provisions, we have listed a few of the major and sort of minor updates in the TPL and the amendments themselves. We start off with basically Article 1, which, as per any law, has the definitions of the actual or we say subheadings that are present in the amendments. One of the minor amendments that we first look into is there's a slight definition change in the, or sorry, slight grammatical change in the word, in the definition of premises. Now, this wouldn't really have a significant impact from a tax perspective, but what would actually have a significant tax impact would be the definition of the word assets now also includes intangible assets. Now, the inclusion of intangible assets puts, significant impact on the taxpayers that they are now required to also maintain documentation and retain documentation pertaining to their goodwill, research and development, and intellectual property items, and so on and so forth. And if you would want to move on to the next article, which has a significant change and far-reaching implications, the amendment to the clause 1A of Article 2 has been amended by interchanging the words including with, not limited to.
Yep.
Now, this changes the scope of the definition. This is now, the list of these required documents is now inclusive rather than an exhaustive list.
Yep.
So there are other documents that can be required to be maintained, but these are just some of the items that the EFT expects
Yes.
you to maintain.
Yes.
Right now, coming on to the addition
Yep.
of clause 1B and the changes that brings forth is now the FT has further expanded the scope of required documents. Uh, these documents will now may now include your contracts with your customers, your suppliers, any communications you have with them, any sort of what do we say, documents that might pertain to assessments or your calculations and the basis of such documents and calculations.
I agree. I agree, Aman. So I can envisage because it's not only limited, things are not only limited to the accounting or the ERP now. It's related to beyond that, maybe the
Yeah,
commercial aspects. If you see, they are asking for the correspondence, they're asking for invoices, they're asking for trade license of other parties, including yourself. They're asking for contracts, they're asking for a lot of estimates. Now, if you're doing a sort of input tax apportionment, it
hmm,
involves a lot of estimates. If you're doing in excise, if you're doing a production, if you're doing a sort of a waste declaration, there are a lot of estimates involved, so they are wanting those basis
yeah,
to understand whether you're reaching at the correct tax point or not.
hmm,
So what I can see is that they are more focused upon related party transactions, whether that valuation is correct, whether the transfer pricing policies, because now again the corporate tax is be just implemented. So they are focusing, and the amendment is related to that as well. They're wanting more records related to related parties also.
yeah,
And what I could see is that in the public clarification which they bought for this amendment, they are focusing more on additional documents which are required to conclude or do an audit. Right.
definitely, yeah.
So they can go beyond anything. So they can
I mean, the
sort
scope
of
is limited.
precisely. So they have not defined anything. They are saying that we can go and review everything, and of course they are well within their rights, because
Definitely,
if
yeah.
they want to review something, they can do that.
Hmm.
Yes. Moving ahead. So what we have seen that there is a transformation which is happening, and if you may ask me, there is a tax UAE tax transformation or digital transformation which they are focusing on right now. We can see the other departments of the government, whether it's the procurement department or the other departments which are there in the government, they are moving towards digitalization. With that initiative, by 2025 July, they want to digitalize and come up with e-billing system, which is similar to the tax invoicing, e-tax invoicing in KSA, wherein they want to regulate the entire ecosystem in such a manner that everyone in the ecosystem knows and has that sort of if I'm issuing an invoice to my customer, he
Yeah.
also should know in his portal it will be visible that he has purchased something from me. And the entire supply chain has a flow wherein that everything is electronic. If
Mm-hmm.
I'm issuing an invoice to my customer is issuing it to his customer. So until unless the end customer, the entire supply chain has a e-invoicing. There is
Invoice.
no
Yeah.
there's no sort of a leakage of tax, or there's
Yeah.
no tax evasion. And again, the digitalization is because of sort of preventing the use of paper. There will be reduction in sort of what you might say errors, mistakes. And of
Well, it's
course,
easy for the FT to sort of
precisely,
maintain
and
all.
and
Yeah.
and, and to be very honest, this is the stepping stone towards e-audits.
Yeah.
Now they are referring to a lot of e-audits in the public
Mm-hmm.
clarification, and the portal also speaks a lot about e-audits.
Mm-hmm.
So I think they're moving towards the electronic audit, wherein they'll audit you electronically, they'll maintain records all electronically, invoicing will become electronic. So everything will fall in place like that.
Definitely.
Yes. So moving ahead,
Now
yeah.
we move ahead to Article 3 of the Executive Regulations.
Yep.
Now, which basically there is a slight welcome change in this amendment.
Yep.
The retention period for your real estate records has now been reduced to 7 years. So, if you take, for example, that we have provided below, in case the property was, sold on 2nd Jan 2025,
Hmm.
these documents will now be required to be retained from the end of the year for a period of 7 years.
Okay.
So basically, we will now retain these documents until the 31st of December 2032.
Yeah, but I'll tell you something, Aman. But see, this there's an amendment in the TPL which says 7 years. But
Right,
still, we envisage there could be an amendment in the VAT law, because the VAT law still says 15 years
15 years.
for real
Yeah.
estate.
So there's a disconnect between the both of them.
There is a
Yeah.
disconnect. Of course, this will be clarified, or maybe this will be sort of there will be amendment.
Hmm.
But if you acknowledge the fact there are two types of years which are mentioned. If you see capital asset scheme, they
Hmm.
speak about maintaining records for 10 years.
10 years for buildings. Yeah.
Yeah. So, and if you see the record keeping for real estate, they say 15 years.
Hmm.
Even RERA has that
Yeah.
time frame. So keeping that in mind, there is a disparity, and I think that sooner or later there will be amendment, or there will be a clarification on the record keeping for
Yeah.
real
To
estate.
streamline the actual
Yes.
time periods, because now
Yes.
the disconnect is pretty obvious. Now, one of the major significant changes that we would like to touch light on would be the clause 2 of this particular article.
Hmm.
Now, which states that in case there is a tax dispute or you do receive an audit notification, you are now required to maintain documents for a period of additional 4 years from the date of receipt of such audit notification, or from the date you enter into the tax dispute itself.
Correct.
Now, we would also like to highlight that in case you would submit a voluntary disclosure in the fifth year, which would be, close to the expiry of your statute of limitations, you would now be required to maintain the documentation pertaining to that tax period for an additional period of 1 calendar year.
Agreed. 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 So basically, this amendment has been bought. The main intention of the FTA to bring in this amendment is basically people do a VD at the fifth year, and they feel they're scot
This
free.
if yeah,
But
the FT can
that
come for me.
yeah, that's what. So it's better now that if they have one more year, they can at least come back and they can keep this as a priority review for themselves.
Hmm.
They review this and then they move forward.
The move forward. Yeah,
Yeah.
definitely.
Yep.
And well, in case if they find something wrong, they can always initiate the audit and get the
Yeah,
4 years if
4 years.
they need.
Yeah, precisely. So again, if you see, we got this 4 year time frame here in this because it's not an amendment as of today. This is a prior amendment, but we still bought it because we wanted to highlight that if there is a trigger point now, they can extend it for 4 years.
Yeah.
Yes. And so yes,
Great. So I think we can move on to the Article 4,
just one
which.
point I think we missed.
Mhm,
For legal representatives, if a person is a legal representative or a company or a person who's been appointed by the company as a
mhm.
legal representative, and if he is becoming a sort of a person who's maintaining records or he's keeping the records, he has to keep it for one additional year from the date when he stops
Stops representing them. Yeah.
representing
Yeah.
that company.
Yeah.
So that is sort of not a change per se, but that is again defined. We
Something
just
to
wanted to
keep in
touch
mind.
base on that.
Yeah.
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 Yeah. So method of thing keeping accounts, you can say.
Now, methods of keeping accounts and your records, accounting records, and commercial books. The amendment in this particular clause, or the or we say the clarity or that we have been provided with, is that now these records or information must now be provided electronically to the FTA. Now, there is also a specified time limit, which is within 5 to 40 working days. Now, there is a significant impact in this particular clause, which now shifts the onus of capturing all your information electronically, as well as retaining your original documents.
Correct.
Now, as taxpayers, you will have to ensure that your ERP and accounting systems are aligned with how the FD wants the data, right? In
Hmm.
case we do not have how the data, is required by the FD, it's not in the prescribed formats,
Mhm.
uh, we won't be able to satisfy the requirements, and that would just increase a risk of an audit on your end.
Correct. Yes.
And I think now we can move on to Article 5, which is actually a welcome change in the amendment. The FTA has, the amendment now states that the FTA may accept certain documents, or actually all your documents pertaining to your tax returns or any sort of tax, in English. But there are some caveats to this, such as that the FTA may request the taxpayer to translate these documents into Arabic, which is at the discretion within the time frame specified by them.
Correct.
Other than that, it is also important to know that in case any documents are being translated into Arabic, we do need to follow the local translation laws that are applicable.
Yes. So basically, this what I can envisage is that in 2022 there was an amendment wherein courts started accepting
Yeah.
representation in English. So I think this is just a follow up or maybe a shadow of that. And of course, this is a welcome move. But what we suggest our clients is that maintain records in bilingual,
Mhm.
one side English, one side Arabic. It becomes easy for communication, and of course, all the documents should be sort of attested by legal translators
Yeah.
and sort of, because this is very important, because this means of communication should not be an barrier.
Yeah.
If
Exactly.
you want to communicate something, it should be like
Official channels with official
precisely my
language. You
point.
can't
Yes.
Google translate this and get
Yes.
them the wrong
That
information, right?
that's the main thing. That's the main thing. So yeah, that's a very welcome move, and now language is not a barrier anymore.
Yeah, yeah. I mean, we have seen it before. You needed to file the TDRC applications in Arabic. You had a reconsideration request in Arabic
Yes.
initially at the start of
Yes.
VAT, which has now moved on to English as well. So
Yes.
it's
So
changing, but welcome change.
yes. Agreed.
Now we move to the tax registration related procedures. Now, as many of you may be aware, we are required to update, certain information on the FTA portal.
Yep.
Basically, you update the passports, the MSIDs of your authorized signatories, your trade license details, etc. But now the scope of this article has been expanded
Yep.
to include entity details, right? You would also include your trade license activities. Maybe there are changes in your legal structure from a sole proprietorship to an LLC.
Correct.
That is also an option that can be amended now.
Yep.
Previously, you were required to submit a deregistration application and then
Correct.
re-register, but that's not sort of a requirement anymore as per the amendment.
Yes.
And the last thing that might be, you know, updated on the portal now pertains to the partnership agreements for unincorporated partnerships, which was previously not listed.
Yes.
Now, you should also note that the items of the list that has been provided by the FTA for such amendments is not as a taxpayer to ensure that all relevant details on the portal are up to date at
Correct.
any point of time.
Precisely. So basically, I what I can see from this amendment, one welcome move is that previously, if you were changing the form from maybe from sole proprietorship to LLC
Mhm.
or LLC to sole proprietorship or whatever, if there was a change in form, you had to deregister and register.
Which takes up considerable amount of time.
Yeah, and it is stressful
Yeah,
because you need to go deregister. Maybe there is an audit, maybe there's no audit,
yeah.
and you re-register. Until unless you deregister, you can't re-register. So I think that has been taken care of.
Mhm.
But again, how this will be implemented, we are still yet
Yet
to
to
see.
see. Yeah.
So, but yeah, that's a welcome move. But now one more thing is there, that if you're not doing transactions, if you're filing nil returns for VAT, like for a period of 12 months, 13 months, the FTA has the right now to auto deregister you.
Yeah. Yeah.
That's a very good thing. Like people are just filing returns for like period of 12 months, 14 months, 16 months. They're not doing any transaction.
Hmm.
So
I
they
mean,
can
there's no
deregister.
reason to remain
Of course.
registered. Now the FT has the
Second,
power to
yeah.
re-register you.
Secondly, the excise tax guys, there are many registrants. Like if the last survey said there are about 5,000 registrants for excise, out of which, to my knowledge, because we are doing excise in full fledged, so we know that at least 1,000 or 1,500 are filing nil returns. They're not importing, they're not producing, they're just filing returns
Yeah.
nil. So the FTA now has the power to auto deregister them. But of course, that does not say that they will not audit them before giving them the sort of canceling their license. So
Right.
that is one thing which is there.
And
Again, one more welcoming change which is there is that the if you do not update the FTA's portal with the trade license, now the licensing authorities, that is like DMCC or maybe DLD or maybe all those licensing authorities like DSO, everyone can now give the information to the, they are bound to give the information to the FTA that there has been a change
mhm,
within 20 days, 20 business days, and that does not shift the responsibility of the taxpayer to update.
mhm.
So again, if you're missing out, there is a possibility of penalty of 5,000 if you miss out,
Yeah,
and
definitely.
subsequent again there is a
Definitely.
higher penalty.
And I think just to add on to the deregistration changes that we have
Yeah.
seen, previously, if we did have a deregistration, the TRN was cancelled. It's now move on to, a suspension stage.
Yeah.
Effectively, it's not a major change, but that's what they're saying.
Yep. Moving ahead.
Yeah. So now moving ahead to Article 9, which pertains to your allocation of your payments and credit balances on the FTA portal. Now, there is no significant amendment to this article itself. There is just that there is, more additional clarity in the actual
Yes.
clause. Now, the FTA has clarified that in case you have any credit balances outstanding
Yeah.
on the Emirat tax portal, now the FTA has the right to adjust any outstanding payments due to them as per their seniority level,
Correct.
right? So now you might have instances where you don't intend to pay something off right away, but now the FTA does have the power to settle those balances in case you have a balance on the
Correct.
actual portal.
Correct. So Tanu, like previously we have seen in most of our clients is wherein they had refund situation. So what happened is that if they filed a VD, their penalties were adjusted with the excessive balance.
Right.
Okay, so we've seen that happening. Now the FTA has that right. It is well within their powers to adjust it. So one problem which we faced in our client was the client had excessive balance in millions. So they were filing VDs for all the tax periods as that we did that. And on the sort of time of filing the penalty waiver application, because the FTA, while they were reviewing, they said that you file the penalty waiver application and of course do that. So while we went to file the penalty waiver application, we were not being able to file because the penalties were already adjusted. There was no
Mhm.
reference number of the penalty on the Imara tax which we could allocate for the penalty waiver. So that problem we have already faced. So the, and again the FT as well within their rights, like again TPL defined rights of FT and the taxpayers. So again they are well within their rights.
Yeah,
So
now they have clearly mentioned, provided more clarity
precisely.
on how they will settle up the balances.
So
Mhm.
in one of the practical insights which I can give you is that we were told to approach the DG and Director General to sort of discuss this matter and ask for a waiver separately, because again there was allocation which already happened.
Yeah. I think we can move on to the next slide now,
Yeah.
which I think is one of the most significant impacts that we will face. There are serious,
That will have a major impact actually.
definitely
Yeah.
far-reaching implications. We have the amendment to the process of submitting a voluntary disclosure, or the requirement to submit a
Yeah.
voluntary disclosure. Now, prior to these amendments, a taxpayer could adjust their zero-rated supplies or exempt supplies or
Hmm.
import of services, without the need of filing a voluntary disclosure,
Hmm.
because the the due tax impact was less than 80 10,000.
Hmm.
And the same was clarified by the FTA multiple times. You don't need to submit a VD for such supplies. But now, as per the recent amendment, it clearly does state that in case there are any changes or errors in such supplies over your previously filed returns, and even if the due tax impact is less than 80 10,000, you would be required to submit a voluntary disclosure.
Correct.
Right. At the moment, they have specified, uh, what do we say, just these three or four supplies, but we'll still need to see or maybe wait for their information on how we would treat, standard supplies or purchases from a VD perspective as well.
Correct.
So that is something that still hasn't been said, but that should, what we believe should continue as it's always been with the adjustments in the next tax period.
Yep.
So, what do you think? Will this have the retrospective effect or?
This is going to have a prospect. Yes. So
So basically, that is the main far-reaching implication, right? That
Yes.
whatever has been filed till date will now need correction through a VD in case the due tax is less than 10,000.
Correct. So just to add over here now, so in excise tax, what happened? Most of the transactions or most of the declaration-driven transactions, if there is a mistake in the declaration, if you have selected the wrong GTI and that is a product code, if you've selected the wrong quantity, if you selected wrong transaction thing details, wrong import port and all, in that case the declaration is wrong. There's no opportunity to amend the declaration. In that case, what happens is that the FTA would request you to do a VD even if the impact is zero.
Zero.
Reason being, you don't have an opportunity to rectify in the subsequent
Yeah.
return. So in excise tax, most cases I would say, rather than if I say 100% cases, yeah, I will be correct. In 100% cases, you have to do a VD if there is a mistake, even if that there's no impact, even if there is zero impact. So for excise tax, it works a bit different. But of course, for VAT, again, you guys have covered, and that is true. And of course, we need to sort of wait for a proper guide on voluntary disclosure, which can
Yeah,
give
there
us
should
more
be some public clarification on this.
precisely.
Yeah, because we do need to figure out if in case we do decide to submit the voluntary disclosure, do we still incur the penalties because there is no tax leakage to the revenue. So I think that covers the impact of Article 10. We can now move on to Article 11, which
Yes.
is pertains to the means of notification that the
Correct.
FTA can use. Now some of these channels were previously used by the FTA,
Yep.
but the definitions has been expanded to clearly define
Correct.
what the means of notification could be.
Yes.
Now these include SMS through your mobile numbers, communications through email, or much more recently, communications through their smart applications, which are available on both iOS and Android.
Correct.
Right now, due to these communication channels and sort of them being online or ways to reach a taxpayer, we should ensure that all our communication channels that are listed on the Emra tax portal are up to date. Right, none of the mobile numbers are not registered anymore, or the email ID is not reachable.
Yep.
Right, because in case the FT does notify you through one of those channels and we don't respond to them in due time, it could lead to potential penal consequences.
Yes. Yes. I totally agree. So the notification now can be sent to under a taxable person. It can be sent to a tax agent or
Yeah.
a legal representative. It can be sent to anyone. Okay. So apart from that, also the means of communication, if you want a specific means of communication, if you want your letter to be delivered to the reception of your office, or if there are 10 receptions to a particular reception, you have to get it clarified in writing with the FTA that okay, fine, this is the means of communication specific to me, and they have to accept it. If they accept it, then of course that becomes a appropriate means of communication for you.
So basically, FTA, like businesses won't be, cannot say that we missed on this
Yeah.
Yeah.
notice or this notice. So yeah.
So now again, to be very honest with you, if you want a different means of communication, you have to agree with the FTA. Second thing, we have seen clients receiving emails in the old email address, which was where the employee has left or something like that. That they cannot plead that we missed the email because the employee left, or maybe because that was delivered to a person who was on a holiday. Those pleadings will not be accepted, because If you miss the communication, you miss the communication. What we have
Exactly.
seen technically, once we are actually filing uh, sort of reconsiderations and TDRCs, the lawyers basically take a ground about notification. Okay, whether the notice or the order from the FTA or other, if there is a rejection from reconsideration, those have been properly delivered. They're technically and procedurally compliant. So the procedural compliance also plays an important role with the delivery of notice, and it should be well within the time frame. Yes.
Now, I think we can move on to the next article.
Moving ahead.
Now, this particular article, has faced certain amendments. This talks about the conditions and the controls for registering a tax agent.
Hmm.
Right now, this particular article was available previously. However, they've expanded the scope to now, clarify what a tax agent needs in terms of his educational and requirements and his experience requirements to actually qualify as a tax registrant. Now, these requirements may be that you either need 3 years of experience in the last 5 years,
Mhm.
along with the bachelor, recognized bachelor's and master's degree in accounting, tax, or law. Or alternatively, you can also have 3 years of experience and in the last 5 years, along with the recognized bachelor's degree and a professional qualification that is approved by the FTA or recognized by the FTA. Right. And lastly, you may also register as a tax agent if you have 5 years of experience in the last 8 years and a recognized bachelor's degree. So they do place emphasis on your educational requirements and your experience hand in hand. Right. And it is also, sort of important to note that a tax agent now also needs to pass a qualifying test that is, prescribed or specified by the FTA to register as a tax agent.
Hmm.
However, there are some, how do you say, good changes or noteworthy changes where a tax agent is now not required to be fluent in both English and Arabic. And now either one is acceptable by the FDA, and they also do not need to obtain a medically fit certificate to
Yeah.
perform the duties
Correct.
anymore.
Correct.
Right, and the last major amendment in this article would be the uh, ability of the judicial persons to register as a tax agent. However, that is only applicable from the 31st of 1st of
First of
December
December.
2023.
So basically, the it's a welcome move because again, English has been accepted,
Yeah,
and again, what we can see is that the FT is more focusing on continuous development.
definitely.
They will conduct programs to continuously develop the tax agents, and the main agenda is to keep the tax agents updated and well equipped. Apart from that, this judicial person is that again, currently we have tax agents who have engaged in a lot of businesses
Hmm.
and they become a tax agency. Now
Right.
they have come up with a new concept of judicial person wherein a tax agent can also include a law firm or tax firm or accounting firm as a tax agency.
Hmm.
The name has become a judicial person.
Hmm.
Now we need to see how the registration process will work for this.
Yeah,
Again, of course, every year annual renewal is there. Again, every year you have to update yourself.
yeah,
So
yeah.
those things are there. Again,
So yeah, those things are there, and we have touched, base on them in the next slide.
yes,
So we will give a brief on that as well.
yes,
Um, we come on to the actual, procedures for listing and delisting of tax agents. Now, there's a detailed procedure has been published by the FDA, which gives guidelines on how a tax agent can be listed or delisted. Now, if we come to the listing of a tax agent, one of the noteworthy points to take away is that the tax agent must make the relevant fee payment to the FTA within 20 business days
correct.
of receiving the notification
Hmm.
of their approval. Right. Now, secondly, a tax agent should also ensure that they renew the registration once every 3 years. And this renewal request should be placed 20 business days prior to the expiry of the actual registration.
Correct.
Now, the main impact here would be that in case you do register, after the lapse of the 20-day business period, your application is not a renewal anymore.
It's a
It's a fresh
re-registration.
application all over again.
Agreed.
Again, you'll have to go through the qualifying test and, sorting out your documents. So
Yes.
there's a significant hurdle.
Yes.
Now, if we move on to
The-
the delisting of tax agents,
Correct.
the FTA may delist a tax agent if they, deem fit that the agent cannot perform the duties or obligations properly of what they were assigned to do,
Correct.
or if they believe the tax agent was in violation of you know, the local tax law, such that it challenges the actual integrity
There
of the
should be,
tax system.
yeah, this ecosystem of tax should not be hampered basically.
Exactly, exactly. And uh, and the last point would be the FTA could also delist you as a tax agent if they are made aware or if they find out that you are a member of the tax dispute and resolution committee.
Agreed.
And I think
Moving ahead.
moving ahead to the, no, I think we have to go one slide backwards. Yeah. Article 14 now, which speaks on the obligations and rights of these tax agents. Now, this article, the rights and the obligations of these tax agents has not really, you know, changed, but there are certain requirements that these tax agents should now meet their professional development requirements,
Yes.
and that these agents must retain any documents pertaining to the tax bill person that they represent.
Correct. So moving ahead now to the notice of tax audit. So now the FTA shall give a 10 days prior notice before initiating a tax audit, because again, it gives the time frame for the or the taxable person to prepare
Yeah,
and sort of maintain the records, because there's that again, initially what used to happen, the FTA used to give 5 days, 15 days depending upon that. Now again, as per law, they can give at least 10 days. So in the interest of time, we'll just be moving a bit faster right now, because again we have like small time left. So next slide. Yeah. So audit proceedings, like we had already discussed, it's not a change per se, but again, there's been more emphasis on the electronic
electronic stored
audit.
information again.
So again,
This
electronic
rounds
audit
back
and
to them for the requirement to maintain the ERP and accounting systems,
precisely,
basically.
precisely. So this is something which we have already discussed. So moving ahead. So yes.
Now coming to the seizure and retention of documents and assets. Now this has a slight change in the or the amendment in the particular clause, which has now removed, the 45-day limit
Yes.
that was previously, available to the FTA for disposing any perishable
Perishable.
goods that was seized by them. Right. But however, the main implication on this would be focused towards, when we circle back to the definition of an asset in Article 1, which now includes intangible assets.
Correct.
Now, any assets under this Article 18, we will also have to ensure that the intangible assets are taken into significant consideration as well.
Correct. Moving ahead. So now again, there is a process which has been defined, that how the seizure and disposure of perishable items would be there. So the entire article is quite detailed, but we are just focusing on the main amendment. So if there is a perishable item and the taxable person is not responding, or they are not being able to trace them, so the FTA will give them a notification. They'll take account of the stock, and then they'll give them a time frame of 5 days. And again, if they think that they are not responding, or the relevant person is not available, they would of course have a right to dispose of or sell or sort of destruct the
Hmm.
goods which are there, which are
Hmm.
perishable. Moving ahead. So now this is quite a major amendment if you ask me. It's a new addition to the tax procedures law,
Yeah.
wherein the FTA is considering to reconcile, or there is a reconciliation
Hmm.
which can happen if there is a tax evasion crime. So if you have done a tax evasion, and if there is a crime, and if you want to reconcile, you can do that prior to initiation of the criminal proceedings. You can go to the FTA. Okay, have an agreement with them. You file an application. If the FTA is comfortable and they accept it, and they don't want to sort of admit a criminal case against you,
Hmm.
they can do that. But of course, you have to pay the taxes and the administrative penalties along with the sum due. Once this is done, then of course it is done. At the second stage also, if suppose your proceedings have been initiated, your initial trials have begun, then also you can approach the FTA along with the public prosecutor, if public prosecutor and the FTA allow you, again you can sort of come up to a compromise and sort of
Yeah.
settle the dispute.
Yeah.
Third, during or after conviction also you can again go to the FTA, sort of request them to remove or sort of compromise on the
Mhm.
penal consequences related to crime, and again that can again be sorted.
So I
So
believe
this,
this was always available previously, but this has not been defined with its exact
yes,
scope and
yes,
the exact procedures that
this
need
is
to be
there.
followed.
This has now become a part of the law.
Yeah.
Previously this was there, but again now it's become a part of the law.
Yeah.
Moving ahead, so the process is again simple, what we discussed. If the taxpayer wants to reconcile, he has to approach the FTA. The FTA may accept or may reject. Then again, the if the case is pending with the prosecutor, or if it's again filed, if they have initiated the criminal proceedings, then the prosecutor will again have to accept it along with the FTA, and then again the criminal proceedings can be terminated. That's the basic agenda.
Yeah.
Is just to reconcile the process of criminal proceedings. And
Basically, to give relief in
yes,
what way
precise.
possible.
Moving ahead.
Moving ahead, we come on to the extension of deadlines. Now, the new ER or the executive regulations and the new TPL provides, updated timeframes for, updated times of the deadlines in relation to your tax assessments, the consideration requests, and your tax objections. Now, this is more so for time extension for the FTA rather than the actual taxpayer, right? So the FTA could extend their deadline by
20
up to
business
20
days.
business days for your the tax assessment or the reconsideration request. And the TDRC could take up to an additional 60 business days to reach conclusion on your tax objection.
Mhm.
Now, what you get as a taxpayer is the FT could extend the deadline for the assessments and the reconsideration, but at their discretion. And similarly for the TDRC, you can extend your tax objection either under emergency or force majeure cases.
Yeah.
And then if we move on to Article 27, which focuses on, the payment of due taxes or, initiation of an audit in case of bankruptcy.
Yep.
The amendment has now prescribed a particular time limit that, the FTA must be notified within 20 business days of an appointment of a bankruptcy trustee. And the FTA from the date of the appointment has 20 business days to notify the trustee of any tax orders that might be initiated or the amounts that are due to them. Now, this is a welcome change as this speeds up your taxpayers' compliance and settlement
Liquidation.
liquidation process. It speeds up your bankruptcy proceedings with the court if that's the
Precisely.
case. So it just makes things a lot more smoother.
Yes.
And coming on to the last but not the least amendment is the request for information and documents. Now, this is a new provision, right? This wasn't there previously in the TPL itself.
Hmm.
This new provision now grants the FTA the right to request any taxpayer for any information or data pertaining to the taxes or whatever it might be
Correct.
for the FT to perform their role and duties responsibly. And obviously, it's well within the right to ensure the integrity of the tax system is always active, right? So now this has a pretty significant impact on you as a taxpayer. You will need to ensure that all supporting documents for transactions are maintained. They're regularly have reviewed so they can easily be shared with the FT because the FT can ask for these documents at any point of time as per this particular provision. Now, it is also important to ensure that all your tax data and returns, tax data pertaining to your tax returns is also stored in a format that the FTA requires.
Yes.
You face, the least amount of probe into your business.
Yes. So basically, the entire amendment, which I can see, is revolving around the changes in the dimensions. Now the landscape is changing.
Yeah,
Corporate tax is
yeah.
coming. So they are more focusing upon information, documentation, records,
Mhm.
which are beyond financials.
Yeah,
They're focusing on quantitative as well as qualitative. So it's not just numbers. They want the
it's
backup.
a full-fledged.
It's a
Yeah,
full-fledged, what we can see and what we can understand
yeah,
right now.
definitely.
And again, things are moving towards digitalization.
Digitalization. Yeah.
Moving ahead.
So, thank you guys for sharing your insights, knowledge, and ideas with such engaged and attentive audience. And thank you, audience, for giving us some extra time. However, due to lack of time, we won't be able to answer to the questions posted on the chat window. But after the session, we may reply on the questions. However, I would ask Amandeep and Gaurav to answer some of the questions which may be common and which may be in everyone's mind.
Yes.
So, what the companies can do to mitigate administrative penalties?
Compliance.
Sure. Right.
Because in the interest of time, one word which comes to my mind is
Exactly.
compliance. If you comply, you are good to go.
And how will you describe compliance in few words?
Exhaustive review, exhaustive analytical review, technical review, and what you might say, a sort of a maintenance of documents. If your records and documents are maintained well, accounting as well as commercial, you're good to go.
Quickly answer what are the dimensions for review of information?
So if I'm reviewing information, whether it's a return or it's a litigative document, if it's a application before the FTA, of course I will cover the facts,
Yeah.
the quantitative factors, qualitative factors, the technical aspects, and then come up to a conclusion of how the representation has to be made before the FTA.
Mhm.
Last question, but very important one. What are the steps one can take to ensure compliance?
Steps which one can take to ensure compliance could include sort of continuous review, conducting sort of internal checks, maker checker approach. Two people can review, two teams can review, one can make, one can review, something like that. Wherein if the records are moving from one person to another, there can be an additional check. So appointment of tax agents, tax consultants to conduct a health check or maybe to review your returns. So these things add value because again, this is a cost, but of course, it's not as costly as what you can not envisage right now.
Okay. So, as we wrap up this insightful webinar, I would like to thank each and every participant who has attended this. And probably we will be coming up again with more webinars in future. So, yeah, thank you.
Thank you.
Thanks, everyone. Have a good day.
Thank you.